Gold just hit $6,000 an ounce. I need you to hear that number, 6,000. Not on COMEX, not on London. Both of those are closed right now. Gold hit 6,000 on Chinese dark market weekend trading, while every traditional exchange on the planet is shut down. That is $750 above where gold closed on Friday. In a weekend, while a war is raging, and that is not even the scariest number I'm going to show you today, a Chinese bank, Zheshang Bank, just published an official notice to its customers, dated February 28, 2026. The bank warned that due to extreme price fluctuations and market liquidity drying up, they may temporarily close their gold savings business. Buying gold, selling gold, physical gold exchange, all suspended. A bank in the second largest economy on earth is telling its customers that it might have to stop letting them trade gold because there is not enough gold left in their system. The vault is emptying. The inventory is depleting. That is not a market correction. That is a system fracturing in real time. And by the end of this video, I'm going to show you exactly why this is just the beginning, why this is going to spread to other banks, and what it means for silver, which is in even worse shape than gold right now. But first, you need to understand what happened in the last 24 hours, because the events that sent gold to 6,000 are so extreme that most people have not fully processed them yet. And every single one of them has a direct consequence for your wealth. The supreme leader of Iran is dead. Ali Khamenei, the most powerful man in Iran for over 3 decades, has been killed by a precision missile strike from the United States and Israel. The compound in Tran, where Khamenei was located, has been completely destroyed. Satellite imagery shows total devastation. This is not a strike on a military depot. This is the assassination of a sitting head of state by direct missile fire. That has not happened in modern history. And what this means for gold and silver is so massive that I do not think anyone, including the people who ordered the strike, fully understands what they have unleashed. Welcome to the hidden economy. If you are new here, this is where I connect the data that nobody else is connecting. Hit subscribe right now because this situation is developing by the hour. Click the hype button underneath this video. Please help me push it to everyone who needs to see it. Let us go. Now, let me walk you through the full sequence because the speed of this escalation is unlike anything in modern military history. It started 3 days ago with coordinated US and Israeli strikes on Iran, precision missile shitting, military installations, defense ministry sites, missile program facilities, all across Throne and other Iranian cities. Iran's defense minister was killed in the initial wave. Israel declared a full state of emergency. Every citizen told to shelter. US embassies across the Gulf locked down. That was phase 1. Gold was already at 494 at that point. Phase 2 came hours later, and this is where everything changed. Iran retaliated. And not just against Israel. Iran launched missiles at Dubai, at Qatar, at Bahrain, at Kuwait, at Riyadh, the capital of Saudi Arabia, at Abu Dhabi. Iran went after the entire region. A US naval base in Bahrain was hit directly by an Iranian missile. American families stationed there watched missiles impact their base. The US air defense systems failed to intercept several of those incoming missiles. That is not supposed to happen. The most advanced military in the world just had its base hit by Iranian ballistic missiles that got through the shield. I want you to understand the significance of that failure. The United States spends over $800 billion a year on defense. The Patriot missile system, the THAAD system, the Aegis system on naval ships, these are supposed to create an impenetrable dome over US forces. And Iranian missiles got through multiple times at multiple locations. That tells you one of two things. Either the volume of incoming missiles overwhelmed the systems, which means Iran has enough firepower to saturate our defenses, or the missiles were fast enough and advanced enough to evade interception, which means the Russian and Chinese hypersonic technology that Iran reportedly received actually works. Either answer is terrifying. Iran is sending a very clear message. If Thrawn burns, the entire Middle East burns with it. An Iranian general went on state media and said something that should terrify every person on this planet. He said, "We have only used our weakest missiles so far. You have not seen what we really have." Now, is that posturing? Maybe. Countries on the back foot always exaggerate their capabilities during war, but intelligence reports from the last several weeks indicate that China and Russia have supplied Iran with advanced ship-killing hypersonic missiles. Chinese defense analysts have written on military blogs that Iran could become the first country in history to sink a US aircraft carrier. Whether that is propaganda or prophecy, the fact that professional military analysts in Beijing are publishing that assessment means it is being taken seriously. A former CIA officer stated publicly that there's no clear defense against hypersonic missiles traveling at those speeds. And he said that if Iran manages to hit a US aircraft carrier, and I am quoting him directly, that would be the beginning of World War II. I want you to let that settle for a moment. A former CIA officer is saying on the record that we are one missile strike away from a global conflict. Whether you think that is alarmist or realistic, the point is that this is the conversation happening at the highest levels of intelligence and defense right now, and that conversation is being priced into every dark market trade happening right now. Then came Phase 3, the kill shot. The United States and Israel located Ali Khamenei and sent a precision missile directly into his compound. I told you the headline already, but let me tell you what the headline does not say. Trump did not just announce the kill, he used it as a trigger for regime change. He told Iranian citizens, take to the streets, overthrow your government. He told Iran's police and security forces that if they stand down now, they will be given immunity. This is not just a military operation. This is an attempt to topple the Iranian government entirely. And that changes everything about how long this conflict lasts and how far gold goes. Here is why the killing of Khamenei changes the calculus for metals in a way that a conventional military exchange does not. A normal strike and counterstrike cycle has a natural off-ramp. Both sides hit each other, declare victory, negotiate a ceasefire, and markets calm down. There would be limited strikes, symbolic responses, quiet diplomatic talks behind the scenes, and financial markets would react briefly before settling down. But many analysts now believe that the situation today feels very different. When a major political leader is removed during a conflict, it can create a power vacuum and make negotiations more complicated. In such situations, the usual pathways toward de-escalation may become harder to find. Reports suggest that several key figures within Iran's leadership and defense structure have been affected by recent events. When leadership structures change suddenly, it can leave military and security officials with greater influence over immediate decisions, while diplomatic channels may take longer to reestablish. Inside Iran, emotions are reportedly very strong. Media coverage shows that many citizens are reacting with shock and grief as they process the news. Moments like this can create intense national sentiment, and when a country is already under geopolitical pressure, the atmosphere can become extremely tense. International observers often worry when strong emotions combine with military capabilities and ongoing regional rivalries. That combination can increase uncertainty and raise concerns about possible escalation. Iran's ambassador to the United Nations issued a short but serious statement directed toward the United States delegation, suggesting that the situation should be handled with caution. Analysts say the tone of the message reflects the seriousness of the moment rather than any immediate resolution. Some former Israeli defense officials have also warned publicly that the consequences of current events could last for many years. When experienced officials talk about long-term consequences, it signals that the situation could shape regional politics and security for decades. At the same time, tensions across the Middle East appear to be increasing. Reports indicate that several areas of the region are experiencing security alerts, and some airports in the United Arab Emirates have temporarily suspended flights as a precaution. Travel disruptions and uncertainty are affecting many residents and international travelers. Saudi Arabia has also issued strong statements regarding the situation and has warned that it may take action if regional stability is threatened. If more countries become directly involved, analysts fear the conflict could expand beyond the current scope. And this is where the story moves beyond geopolitics and begins affecting global markets. Financial markets respond quickly to uncertainty. When investors see rising geopolitical risk, many of them turn toward assets traditionally considered safe havens, such as gold and silver. Gold prices have already been rising sharply in recent months. Some reports suggest that in certain private markets, buyers are willing to pay extremely high premiums for physical gold due to concerns about supply and global instability. It's important to understand what these numbers represent. When people are paying higher prices for physical gold, it often reflects demand during uncertain times rather than a guaranteed long-term price level. The price we saw in major markets last week was calculated in a very different global environment. As new developments occur, markets may need time to adjust as trading resumes across major financial centers like New York and London. If demand increases rapidly when those markets reopen, prices could move significantly as traders react to new information. Another important detail comes from banking reports. Some financial institutions have warned customers that gold trading could face temporary restrictions if physical inventory becomes limited. That type of warning suggests that supply chains for precious metals may already be under pressure. In other words, this is not just speculation from traders. When banks talk about limited inventory, they are referring to real physical supply, the actual metal held in vaults and available for delivery. If many investors attempt to buy physical gold at the same time, banks and exchanges may have to manage demand carefully. Some institutions could temporarily pause certain transactions until supply stabilizes. And this is where the discussion often shifts to silver. The global silver market is much smaller than the gold market. Because of that, it can sometimes react even more dramatically when demand increases or supply becomes tight. For perspective, the total value of the above-ground silver market is relatively small compared to many major global corporations. That means even a modest shift in investor demand can move the market significantly. So while gold is often the headline story during geopolitical uncertainty, many analysts believe silver could experience even larger percentage movements if global demand rises quickly. In times like these, markets are not only responding to economic data, they are reacting to uncertainty, risk, and investor psychology. That is how small this market is. And into that tiny market, you're now pouring the combined demand of safe haven buying plus industrial consumption, plus military demand, plus central bank accumulation. The industrial demand for silver and solar panels, electronics, and military equipment does not stop during a war. It accelerates. Think about what is being fired right now. Patriot interceptors, Iron Dome rockets, cruise missiles, hypersonic missiles. Every single one of those weapons has silver components in its guidance system, its wiring, its sensors. The satellites feeding targeting data to both sides run on silver. The encrypted communications between commanders run through equipment soldered with silver. I looked into this years ago, and what shocked me was how much silver the military burns through during active combat operations. It is staggering. And that is on top of the solar panel industry, which was already consuming record amounts before any of this started. You now have the two most silver-hungry forces on the planet, the green energy transition and a hot war competing for the same shrinking supply at the same time. The supply that was already in a structural deficit before a single missile flew is now being hit with a demand spike that nobody planned for. Mexico, the world's largest silver producer, still has mining regions and active civil unrest. China has reclassified silver as a strategic material and choked exports. COMEX vaults have been draining, and now dealers in China are refusing to sell at 120. The supply side of the silver equation has not just weakened, it has collapsed. And the demand side just went exponential. Let me talk about the Strait of Hormuz, because this is what connects the war directly to your wallet. 20% of the world's oil passes through that narrow waterway every single day. Iran sits right next to it. They do not need to blockade it. They just proved with their missile attacks on Dubai and Saudi Arabia and Qatar that they can hit anything in the region. So what happens to insurance rates for oil tankers? They go through the roof. Even if oil keeps flowing, the cost of insuring each shipment doubles or triples overnight. That cost hits refiners. Refiners pass it to gas stations pass it to you. We are talking about oil at 15 quintos, 200 a barrel. Not as a worst case as the base case if this conflict continues for more than a few days. And the Federal Reserve completely irrelevant now. They were already trapped before any of this happened. Inflation running hot, PPI way above expectations. They could not cut without reigniting inflation, could not raise without triggering recession. That was the dilemma when the world was at peace. Now throw in an oil shock from the most critical shipping lane on Earth. A war that expands every hour. Food prices spiking because diesel doubles. The Fed has no moves, none. They are spectators. And in a world where the central bank is powerless, the only money that matters is the money with no counterparty risk. Gold, silver, physical metal in your hand. Russia has issued a statement that should not be overlooked. They warned that the US and Israeli strikes on Iran could trigger a radiological catastrophe. Think about what they are implying. They are hinting that the strikes may have hit near nuclear facilities, or they are hinting that Iran may respond with a nuclear demonstration. Several analysts have raised the possibility that Iran conducts an underground nuclear test in the coming days to announce to the world that it now possesses nuclear weapons. Let me explain why that possibility matters for gold more than almost anything else happening right now. If Iran detonates a nuclear device, even underground, even as a test, the game changes completely overnight. Iran goes from being a country getting bombed to a country with nuclear weapons that just had its leader murdered. Everything shifts. Saudi Arabia is not going to sit there and watch Iran go nuclear. They start their own program immediately. Turkey reconsiders. Every country within missile range of Iran starts making calculations they have never had to make before. And the rush into gold and silver, which is already extreme, goes to a level that has no comparison in modern financial history. Gold at 6,000 would be the floor, not the ceiling. Whether or not Iran actually does this, it does not matter. What matters is that intelligence officials and former CIA operatives are talking about it publicly. When those people start saying the word nuclear out loud, markets listen. And markets are listening right now. And there is one more trigger that everyone in the intelligence community is watching right now. The U.S. aircraft carriers deployed in the Persian Gulf. I told you earlier what a former CIA officer said about a carrier strike, but let me tell you what happens after that moment. If an American carrier is hit, the political pressure inside the United States becomes unstoppable. Hello and welcome back to the channel. Today, we're diving deep into a topic that's on everyone's mind, the current global landscape and what it means for your money, specifically for gold and silver. It's no exaggeration to say that we are living through a period of unprecedented geopolitical turmoil. From escalating conflicts and shifting alliances to economic sanctions that are redrawing the map of global trade, the foundations of the post-Cold War era are being shaken to their core. What we're witnessing isn't just another regional flare-up or a temporary diplomatic spat. We're seeing a fundamental realignment of global power. Decades-old agreements are being questioned and new blocs are forming. The weaponization of finance, where access to the global financial system is used as a tool of statecraft, has sent shockwaves through international markets. Countries are now actively seeking alternatives to the US dollar for trade and reserves, a process often called de-dollarization. This isn't a conspiracy theory, it's a documented trend, with central banks around the world accumulating gold at a record pace. Why? Because in a world of uncertainty, gold is the ultimate neutral reserve asset. It carries no counterparty risk and cannot be devalued by a printing press. This brings us to the heart of our discussion: gold and silver. For centuries, these precious metals have been the ultimate safe haven assets. When currencies falter, when stocks tumble, when geopolitical tensions boil over, investors flock to gold and silver. But what's happening now is different. It's not just one crisis. It's a convergence of multiple crises. We have geopolitical instability, persistent inflation that central banks are struggling to control, soaring national debts, and a fragile banking system. This perfect storm creates an environment where the traditional arguments for holding precious metals are magnified tenfold. Let's look at the data. Central bank gold buying has been off the charts for the past 2 years. Nations like China, Russia, Turkey, and India are leading the charge, diversifying their reserves away from fiat currencies they can no longer fully trust. This isn't just a government-level phenomenon. Savvy institutional investors and everyday people are also waking up to the risks in the system. They're realizing that their paper assets, stocks, bonds, even cash in the bank, are all claims on a system that is showing visible signs of strain. Gold acts as a monetary anchor in a sea of floating fiat currencies. Its value isn't derived from a government's promise, but from its scarcity, its utility, and thousands of years of history as a store of value. When you see central banks, the ultimate insiders, making such a decisive move into gold, it's a signal that every investor should pay close attention to. They are preparing for a future that looks very different from the recent past. They're hedging against currency debasement and geopolitical risk on a massive scale. Now, let's talk about silver. Silver is often called poor man's gold mix, but that nickname doesn't do it justice. Silver has a unique dual role. Like gold, it's a monetary metal with a long history as a store of value. But it's also a critical industrial metal. Silver is essential for solar panels, electric vehicles, 5G technology, and countless other high-tech applications. As the world transitions towards a greener, more electrified economy, the demand for silver is set to explode. Here's the crucial point. The supply of silver is not keeping up. We're currently in a structural supply deficit, meaning we are consuming more silver than we are mining each year. This deficit is being filled by above-ground stockpiles, but those are finite. At the same time, the amount of silver available for investment is a tiny fraction of the overall market. So you have skyrocketing industrial demand colliding with stagnant supply, all while its monetary safe haven demand is also increasing. This creates an incredibly powerful setup for a potential price explosion. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is still at historically high levels, suggesting that silver is significantly undervalued relative to gold. So what does this all mean for you? It means that in this environment, not having an allocation to physical gold and silver is a significant risk. We're not talking about paper derivatives or ETFs, which come with their own set of counterparty risks. We're talking about holding the physical metal, coins and bars that you can hold in your hand. This isn't about getting rich quick. It's about wealth preservation. It's about having a portion of your savings outside of a financial system that is becoming increasingly unstable and unpredictable. It's your financial insurance policy against the chaos we see unfolding on the world stage. Think of it this way. You insure your house against fire, and you insure your car against accidents. Why wouldn't you insure your wealth against a systemic financial crisis or a currency devaluation? The current geopolitical situation is the flashing red light on the dashboard. The central banks are already heading for the lifeboats by buying gold. The question is, will you? The convergence of geopolitical de-dollarization, runaway inflation, and silver's industrial demand squeeze is a once-in-a-generation opportunity and a warning. This isn't just another market cycle. The very rules of the game are changing. When you look at the news, it's easy to feel overwhelmed. But understanding the role of gold and silver can bring clarity. They are your anchor in the storm. They represent financial sovereignty in an age where that is increasingly under threat. The evidence is clear, from the actions of central banks to the fundamental supply and demand dynamics of the metals themselves. The message couldn't be more direct. The time to prepare is now, not after the crisis has fully unfolded. Ignoring the signs today could be a decision you regret for years to come. I urge you to do your own research, look at the central bank data, study the supply deficits in silver, and consider the unprecedented nature of the geopolitical shifts we are living through. Don't just take my word for it. Connect the dots for yourself. In a world of promises, physical gold and silver are payment in full. They are the ultimate hedge against the uncertainty that defines our times. Thanks for watching today. I hope this analysis has given you a lot to think about. It's a critical topic, and it's more relevant now than ever before. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe to the channel for more deep dives into the markets and the economy. Hit that notification bell so you don't miss our next video. Stay safe and stay prepared. See you next time.